stock that is about to skyrocket. It is a $3 stock. They do offshore drilling for oil and gas. They provide the equipment. Company is Transocean. The ticker is RIG. And they just had earnings. Guidance is looking strong for the rest of the year, over $1 billion. The revenue's up. The earnings was a beat. And the chart looks like it's set up really well, even though its family of offshore drilling peers, publicly traded tickers, have not done well over the past 18 months. Recently, they're turning up the past handful of months, and this particular earnings reaction is a good buying opportunity for RIG. It's not financial advice. Let's get into it.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
They are invested in an AI company as well, Nauticus Robotics. It's not a big investment, and it's particularly a robotics for what they do, right, which is offshore drilling equipment. But this is the chart. This is what catches the eye. This is a huge move down, and if you look some of its similar family of tickers, VAL, RIG, and there's a couple more actually over here that are pretty worthwhile to look at. But before we get to those, I do think the revenue number is important. The revenue is growing year over year, beat earnings expectations, and so as far as guidance, it's good, positive guidance, and not quite as good as what you would need for a huge move up. It's not like they're expecting way more revenue, but at least they're not guiding down. So it's important to have, no sort of guidance tailwinds when you have a beat like this, where the stock goes up. I mean, the earnings per share beat by a lot. You can't always just trust just because this is a 265 versus, a dollar estimate. That doesn't mean it's like a 3 times as good earnings reaction, because there's more than just the actual earnings per share. But the important thing is, this is actually Val. This is its peer. This is what I'm talking about. Here's the beat. So this is more modest. And yeah, they have the same move, right? I mean, this move is actually larger because this is a $3 stock. But importantly, the pattern for earnings is basically a stock closes, and this is pretty near the $4 level. So you would want to say buy off this close, okay? Are we a little below it right now? We are. We're at 380. Okay, but if it gets back to this close right around 390 or so, it's a little murky here, no pun intended, just because basically this is a $3 stock and it's kind of a liquid. But you can see the close right there, 395. Okay, so it's a ton of volume, over $1 billion of volume. So don't be confused just because it's $3 stock. I was confused initially. It's down a bunch. Okay, so it was $8, and really that's why we look at dollar volume rather than just volume. So this company's only been around for 4 years. Didn't have a big run up in 21 like the technology companies. Notably, oil was one of the few companies that started. I mean, this is late 2022, but sort of had some sort of salvaging move in 2022. Crude oil itself, not so hot, but if you look at Val, pretty solid move in 2022 when the rest of the market absolutely tanked. So interesting. And I'm not here to tell you that the market might go down, but oil, when the market goes down, could be sort of a somewhat of a safe haven. I would say gold, except when you look at gold, we've already so extended that it coming back, it could go up here, it could not. This is where you're interested in gold. This is when everyone's telling you to buy gold, and was surprised we came down a little bit. So this is the level. $4 is probably the most simple psychological. Everyone's going to be looking at $4. $3.95 though specifically we looked at as for the close there, and there are some peaks here at 380, which is nice to see that it's holding that level generally, okay, and it's up above there right now because that's pretty important as far as there were buyers up here and this level is getting defended, so aka people want to own the stock above that level. Volumes not super high, so not a lot of selling volume. I mean, definitely some selling volume, but nothing crazy like this. So that's positive. Was kind of forming into a flag. Earnings hasn't really disrupted that. There's a lot of companies coming into earnings where it's like they look great. You is one, but you can't buy this until earnings happen. So you just have to sort of wait and see. But and oftentimes the earnings messes up the chart. So maybe it's even a good reaction. It goes up here, and then it's like you're kind of in no man's land, because this is the breakout point, and this is like the level of support off this left side peak. So you can buy down here, and that's kind of where Joby is another one that's coming into earnings, and it looks great now, but it still has to actually report, and that could mess up the chart. So it is interesting that in the midst of this technical flag, the earnings seems to be helping the flag form. And I know this sounds like nerdy or whatever, but this is literally the supply and demand. So the more people are sort of agreeing that the price is somewhere around here, the easier it is to hop in there and then risk a little and then look for a big move up. Because there's a lot of stocks that there's just no way to get into them right now. And so when you see one, I mean, AAOI is kind of another example that's coming up into earnings. And, it's a choppy stock as well. So they don't make it easy. So this is kind of a rare breed flag and earnings situation. Now, a little more just reassurance about what you're buying if you're buying this idea. Offshore oil drilling is more important as it's harder and harder to find oil and gas close to shore, because that's already been drilled. So that's what these guys help with. Revenues over $1 billion. You don't have to look into like the vanity metrics per day or whatever like that. This is a big number to continue to have revenues over $1 billion. We've talked about these other tickers, and they all sort of do a similar thing. Ultra deep water offshore drilling. HP, when I didn't mention, more onshore, but this chart looks sort of very similar to the others. Very strong. Probably enough time before earnings to consider this one, except again, it's in a channel, so it's not super easy to get into unless it starts to go sideways a little bit. So maybe keep that on eye to make sure that the earnings doesn't totally wreck it. VAL, hopefully this holds up. That will help the sector. But RIG being the $3 stock, I think there's going to be eyes around that $4 level. So that could have the most energy, in my opinion. And as far as essentially, I mean, yes, market conditions affect it, but looking at the price for oil, right, crude oil futures, it doesn't seem that correlated to me. I mean, it's gone down since the spike in June. And if you look at RIG in June, it's basically gone up. See, there's the spike. So I do see some connection there, but not on like a, macro level. It's not really the right use of the word macro, but not on like a zoomed out level. Like, sure, there's some fluctuations. So if something really crazy happens, like, a war or some type of huge glut or some type of oil tariff, I don't even know how that would work with oil that's gas that's gotten from off the shore of the US. But yeah, this could get affected. But other than that, I don't think oil prices are a big deal, just based on literally looking at oil prices and the chart of RIG. And then we'll see as far as this whole nuclear, natural gas transition. But if some news comes out about nuclear, not happening for 10 years and, all these companies, all this speculation pretty much evaporates for OCO and SMR and NNE, then yeah, oil's going to be the only way to make AI happen, which is the only way for our GDP and our economy to be propped up. Currently, that's how it's working. So rig will benefit. That's the company. That's the level. If you like these ideas, hit that like button. If you want to see more, hit that subscribe. If you want to trial the Discord for $25, head over to stockscommunity.com, give it a shot. You'll see some testimonies from some people who did super well. And, joining a Discord, if you're not familiar with Discord, it's basically like Facebook groups. It's just a way to share ideas directly and in real time and also answer questions. And you get access to those recordings of questions as well. Hope that helps. I'll see you in the next one.
This is Sam Putnam. This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam. This is Sam Putnam.